loan is less than $10,000, then no tax update. Capital gains only come into play if it is a capital asset. One Bitcoin is worth $39,984.70 in US dollars. Ask Roger. Hey guys, I'm Roger Herring. I'm the Investor's Accountant, and thank you for coming by our YouTube channel. Before you leave today, be sure you hit subscribe and click the bell. That way you won't miss any of our free educational videos. Hey everyone, I'm Roger Herring. I want to welcome you to my office. This is where it all happens. And today we're talking tax strategy. Specifically, let's talk about opportunity zones. Now, op zones came around thanks to the Tax Cuts and Jobs Act, and they arrived right around 2018. And they got some great stuff in them. They got some great advantages. So what do we do with an op zone? The first thing is we can defer any gain. What do you mean? Well, here's the deal. Let's say that I sold stock. I can't do a 1031 exchange. I can defer that gain. Let's say that I did a 1031, but I didn't have enough property. I had some boot left over. Guess what? I can defer it. I can put that in there. Let's say that I sold crypto. Guess what? I can take the gain and I can put it in here. And oh, unlike a 1031, where I have to roll over everything, I only have to take the gain portion and put it into the op zone. So if I have a house that I sell for $100,000 that I bought for $50,000, I have $100,000 cash at sale. I can put $50,000 in my pocket, put the other $50,000 in the op zone, and defer the gain. Well, how long can I defer the gain? Well, we've only got a little over 2.5 years to go on that deferral. So here's the deal. We can defer the gain until we sell out of the op zone, or 12/31/2026, whichever comes first. Now there's talk in Congress of changing that to 12/31/2029. That's good, but yes, you're eventually going to have to pay the gain. You're going to have to pay the tax. Now, you do get a stepped up basis though, depending on how long you've been in the fund. So, when I sell out, I'm going to assume that I do it after 12/31/2026. I will already have paid the capital gain on the original money that I put in. But if I hold it 5 years in the fund, I get to increase my basis by 10%. So if my basis of what I put in the fund was $100,000, that was the deferred gain, then I get a new stepped up basis of $110,000. Now, what if I hold it for 7 years in the op zone before I sell out? Well, now I get a 15% increase in basis. So 100,000 times 15%, that's another $15,000, 115K, pretty good. But here's the real icing on the cake, and here's the real power of the op zone. Let's say that I hold this property for 10 years, and now I sell out. I can elect to step my basis up to the fair market value date of sale. Yeah, that means no capital gain. So if I've got a $100,000 basis and I stay in that thing 10 years and it's now worth $500,000, I can take a step up in basis on the day I sell to $500,000 and have no capital gain whatsoever. Pretty cool. Now, that's the molasses. There are some requirements. Here's the deal, guys. Op zones are designated by the governor of each state, and there's only a certain number of op zones. Now, these were never designed for small investors. All right, but plenty of people jumped on it right and left. So here's the deal. Most opportunity zone funds, and you have to invest through a fund, require you to be an accredited investor. What the heck does that mean, Roger? That means you have to either have $1 million net worth, or if you're single, $200,000 of adjusted gross income for the past 2 years, with the belief that that will continue. If you're married, that number becomes $300,000. Okay? But Roger, I can do my own zone, can't I? I said, yeah, you can. But here's the thing. It's more than checking a box on a tax return. Here's some things you need to know. 90% of all of the assets of the Opportunity Zone Fund have to be in the Opportunity Zone. And annually, half of the gross income for the Op Zone must be earned in the Op Zone. Now, the gross income that you're earning each year, well, actually the net income that you're earning each year, that's taxable income, okay? That's something to remember. Now, here's a big one. This is a big one, okay? You must substantially improve the purchased property. Now, what does that mean? That means over 30 months, you have to double the basis. So if you bought it for 100, you got to put 100 in. If you bought it for 500, you've got to put another 500 in. You have to double the basis to substantially improve the property. Okay? And guys, this is just the simple stuff. So I don't recommend you try it on your own. At the very least, get a consultant that knows what they're doing and can coach you through how to do this. What you need to do, make sure you dot the I's and cross the T's so you're not left holding the bag. All right, guys, that's Op Zones in a nutshell. Great talking to you today. Until the next time, Roger out.